Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. I have with us today a good friend. I have Scott Walters. Scott, first of all, my friend, how are you today?
I'm super good. Thanks for asking, Travis. More importantly, I hope all our viewers are doing well in this craziness right now. Hopefully we can bring a little clarity and make a little sense of the real estate market. And yeah, I'm really excited to be back on the channel. It's been a while, so thanks for having me on. And yeah, let's have some fun.
It's been too long, Scott. It's been too long. Let me throw up your channel real quick. If anyone wants to know where Scott's channel is Scott Walters Real Estate. And Scott's actually joined us today to give us some additional perspective on exactly what's going on in the market. Now, Scott, can you tell our viewers who don't know you, obviously you're a celebrity, and again, from the bottom of my heart, thank you for bringing me in under your wing. But Scott, can you tell our viewers, who you are? Tell them, what you do in real estate, a little bit about your background.
Well, absolutely. I'm Scott Walters. I'm based right here in Southern California. I've worked in and around real estate for many, many years. I lived through the '08 crisis, even suffered a little blowback from that. I own and operate commercial and residential properties here of my own holdings, and then I help buy and sell and lease residential and commercial for clients as well, courtesy of YouTube and the crisis. The crisis is kind of a double-edged sword for me on one hand, because a lot of things didn't pass the smell test, overheating the biggest asset class in the world, the U.S. housing market being number one. And even though I was somebody who benefited from that, I just couldn't keep my mouth shut. I had to come and start warning people to maybe be cautious, because anytime the markets exhibit bubble behavior, there's going to be some crash risk. And you're hearing it from somebody who has financial gain in these markets. So I hope that has a little bit of impact. So far it has, and YouTube's been awesome in one sense, and even meeting people like you, and congratulations on your channel is great. It's awesome. We have a group chat with you and a couple of the other collaborators where we continue to try to be iron sharpens iron, so we can pass on some insight to the viewers, because many people, Travis, just don't understand the severity, the magnitude of what we just did to this housing market. Unless you've lived through maybe a crash before and suffered a little blowback, I don't think you have the scars required to really weigh in, I believe, accurately in any real estate bubble, but specifically this one, which is in fact the quickest, biggest bubble ever witnessed in human history. That should have some people's full and undivided attention. I know it has ours, so I'm really excited today to talk about whatever you want to talk about and bring you guys some hard-hitting facts, or at least my take on it.
I mean, and Scott, the reality is most people are not going to understand the severity of what's going on until they get wrapped up in it. Unfortunately, the saying goes, a lot of people just don't know what they don't know. And obviously, you got wrapped up, I got wrapped up out of foreclosure, bankruptcy, and repo. So, I just want to say, Scott, I find your commentary, I find what you're saying extremely refreshing. And I constantly tell realtors, and basically you're a realtor, you're active in the industry, you see what's going on, you have access to all of the back end data. And I'm constantly telling people, and I bring you up as an example and a couple other YouTubers, but we don't have to lie. Realtors don't have to lie to be successful in real estate. In my opinion, realtors have to tell the truth and basically use the data to find the great deal. The problem that I have with realtor, Scott, is the toxic cheerleading. What they're saying, oh, values only go up, they only go up, when the reality is we know historically that's wrong. But thank you again for being here. Bless your soul for at least the caution, man. I really respect that about you, Scott. My first question, man, is, in your opinion, what happened to prices? And I say that like this: essentially, since about June, the end of June of last year, prices have been going down. And you mentioned it a little bit earlier in this video that they went down at a historical rapid pace, even faster than the last great financial collapse. But what we've noticed, according to the data, is home prices rebounded starting around the beginning of March. Can you, chime in a little bit to what you think happened? Is the crash canceled, Scott? Is there going to be no crash? Is value just going to keep going up? Can you share a little bit about your opinion?
Absolutely. Well, as much as I'd love to say the crash has been canceled and this time is different and no crash risk here, I still don't believe that's the case. Even if we look back at 2008, the behavior of that bubble and downturn, it demonstrated similar data that we're seeing now with this downturn. We did see interest rate hikes shock the markets, and then we started to see some stabilization, flatlining at best. All areas are going to behave a little differently, but we started to see some declines, and it looked like, okay, here we go. Get ready for the roller coaster ride. And then, like you said, we had a little bit of a sucker's rally, a dead cat bounce. Call it whatever you want, but this was demonstrated in 2008 as well. So I don't believe that you can save this thing. I think it's eventually going to have to equalize, because people can no longer keep up with their cost of living, Travis. I mean, I continue to see more and more people now stretching themselves incredibly thin, where the majority of their income now is going for housing, whether they're renting or buying, and a lot of people being pushed to the streets, living in cars. I'm seeing a lot of indicators right now. So I don't know. I think one of the things you always want to do is expect the unexpected. Prepare for the worst. Hope for the best, prepare for the worst, maybe come out somewhere in the middle. But a lot of people, like we opened the show with, unless you've really lived through a boom and a bust cycle firsthand yourself, firsthand. I mean, you know what it's like to live through one of those, being the financial breadwinner of the family or whatever the case may be. You don't even have any idea of the potential of what's lurking behind. Now, what I believe currently, what we're seeing, Travis, is my market condition heat map, is we clearly stifled inventory with lockdowns, and then we stifled it again with low interest rates, people jumping into these rates, and they're trying to hang on to the home now. Unfortunately, even with those low rates, some people cannot keep up with their cost of living. So when we rose, the challenge I'm seeing personally is a lack of inventory. That's the only thing left right now. As soon as inventory comes, this thing is on. Believe me, 100% it is on. But we just got started right now with interest rate hikes. So prices are still pretty elevated, but now your cost to carry a mortgage is also elevated. So we're at that standoff, right? It's basically the breaking point. It cannot tolerate anything else. And so basically prices are going to slowly start coming down unless we get some black swan, which at this point, I'm almost halfway expecting a black swan event to really come out of left field and shock the financial markets. I mean, we are one news event away. But even if we don't get that, I think right now what you can expect is we will slowly bring this market back down to earth. And if 2008 was any indicator, it's gonna potentially be, it's going to catch a lot of people like a thief in the night. They'll be chasing the market, stuck on the market, showing the kiss of death, price reductions. We got a lot of stuff going on out there, a lot of headwinds to contend with. So that's kind of where I'm at with, in terms of market conditions personally.
Yeah, and honestly, Scott, what's really interesting is that rebound, dead cat bounce actually happened in 2006, 2009, and 2010. In fact, in 2006, we actually had a period, I believe, of 4 months of equity decline, followed by 7 months of equity growth. Fast forward to today in 2022 going into 2023, we had 7 months of equity decline through Case Shiller. Anyone can go find this out. And only 4 months of equity increase. What I'm seeing on a national average, and again, going off of median sales price, unfortunately, we have to use that. It's readily available data. Case Shiller is lagging. And looking at the week over week data, the rolling 1 week average, prices are going down. And more than likely, I believe that's going to happen into next year. Inventory should be going up. So to recap, basically you're saying the reason for this rebound is essentially not enough time has passed. We're in a cycle, a lot of money printed. It's going to take more time, and that is being fueled by the lack of inventory. Is that correct?
Yeah, pretty much. We have the inventory in a chokehold. It's in an absolute stranglehold at the moment because it's a lack of inventory, but the prices are still elevated. So we know loan applications are at historical lows. We see all the indicators. You report on them in a very consistent basis, pulling from the data to show us. And in fact, that's what's going on. So all the indicators are there. I say this on my show constantly. As a trained salesman, if you come to me and you want to sell your house, I say, great. And then you're going to have some opinion of what you think it's worth. And then I'm going to tell you what it's really worth. And you're probably not going to like it, but I'm going to give it to you straight because I don't want your listing if I got to go try to chase the market, stuck on market, showing the kiss of death and price reductions, and then have a severed relationship. I don't need the work that bad. But let me just tell you, friends, what's going to happen as soon as inventory comes, it's going to get competitive. What I always do is say, fine, I'll take your listing. Let me do some comps. all right, this is what our house is. We need to find out who our competition is. Number one, first things first, in this environment, well, you have a little bit, you have, look, your buyer pool is very small now compared to what I had in the height of the euphoria. I had people lined up around the block to look at a house. Now I got to get everybody over to an open house. How do I do it? By coming on at the top of its value range? Over asking for the thing? No, I got to find out who my competition is and do what? Beat them. I've got to beat my competition, get everybody who's shopping in that price range over to your property. I can't do that if you tell me, well, Scott, my neighbor sold for $1 million and I want $1.5 million. I can't do it. I don't want it. Go try some sucker down the street and get stuck on the market with them. It's just, that's what we're up against, Travis. That's exactly what we're up against.
So, it leads me to the next thing, Scott. I mean, if you can talk to the viewers, and specifically, especially viewers on the sideline that are frustrated, what happens next? What happens in your opinion, what happens the remaining part of 2023? What happens into 2024 as it pertains to prices of houses?
Well, Travis, if I had a crystal ball, I would be on Fox, NBC, ABC, and all the major news networks, which I actually have been invited to a couple of news networks. So I have been pretty accurate in my forecasting of the markets, but nobody has the crystal ball. For me, what we know, we started reporting early on in the crisis when all this transpired due to stimulus measures, stimulus programs, and stimulus money entering the system. We kicked the can too far down the road with the real estate market. We should have rose rates immediately when it started demonstrating bubble behavior. So we kicked the can too far down the road. Now we're coming to the party a little late, so we're going to tame these markets hopefully without crashing them. That's the hat trick that's never been done. So that's the tricky part. What I currently forecast is one of two things, really. One is we're going to continue to operate the way we're operating now, a cooled off market that's flatlining in a stranglehold that's slowly being brought down to earth. That is going to continue to happen until properties get affordable enough for the locals to come in and be able to start buying homes again. Too many areas now people just can't afford. And so we see historically that always has to be the case. You need the locals to be able to afford homes. So we're going to see these prices, I believe, at best, moving forward through the remainder of this year, flatline, no more going up. You could if you're thinking about selling, now's the time to do it. If you're waiting for your house to appreciate more, it's not. It may be a tick or two if you're lucky, but then it's going to be coming back down. The chances of it coming down are much higher than your prices continuing to go up. We're going to flatline at best and probably see the usual suspects. And because this crisis was a little different because we had a lot of migration, some areas like where you're sitting today, Texas, maybe weren't as bubbly in 08. We've got a lot of bubbly areas that are already demonstrating crash behavior. So all areas are going to behave a little differently depending on local economies, blah, blah, blah. But we will see the rest of this year, barring something coming out of left field, some kind of black swan event, which we could get at any day, like another bank failure or something crazy happens. We are going to flatline at best, probably start trending downward from here. And then as soon as mainstream media gets a hold of one piece of information, it could be Airbnb collapse, it could be foreclosure spike, it could be short sales knocking at the door. If the mainstream media starts to run with anything, it's going to light the fuse, and the race to the bottom will in fact you will witness the race to the bottom, and it's going to be ugly.
You're a smart guy, Scott. You're a smart guy. Why is it so hard? Anyways, you're a smart guy. Really, really great stuff, man. Next question, leading into our last question, and really think about it. You probably have the answer already, but what can you tell the buyers on the sideline right now? They're on the sideline, Scott. Maybe they're priced out. Maybe they're not priced out. Maybe they're sitting out because they want to wait out the housing market. They want to wait for affordability to come back. They want to time the market per se. Can you speak some life into them, Scott? Can you give them perhaps some hope, or really as an industry professional, and you've seen a lot of things, can you speak into the, what they're going through right now? And Scott, that society is beating them up. Society is bullying these people, saying, you better buy now. If you don't buy now, you're going to get trapped renting. Home prices only go up. You're going to get someone else rich. You are a fool for not buying right now. Can you talk to those people, Scott?
Absolutely. Friends, I got good news and bad news. Let's jump into the bad first. get that out of the way so we can get to the good. So the industry is full of cheerleaders. Anybody that's a licensed agent, I'm with the biggest brokerage in the world, helping people all over the United States now, looking at properties if they pencil out, using certain tools that I like to use if we're buying right now to make sure you're protected. And there is some safety out there if you know what you're doing. You don't get hurt when you buy, you get hurt when you sell. So part of the bad news is real estate agents go through sales trainings weekly. Weekly sales meetings to get you off the fence and buy now. But date the rate, marry the house. Stupid coin catchphrases. Oh, you always want an agent that's willing to put your needs before their own. I saw agents like, are they ready to buy now? They all cash, otherwise I don't have time. Those are the agents that are going to fall off the wayside. It's the people ready to turn and burn, shake the trees, kick the tires, offend some sellers. That's the agent you want, and it's really hard to find. So luckily, it's been a lot of fun working with clients in that respect. Now, in terms of also, okay, yeah, this was what I was going to say. You're not going to time the bottom. If you're waiting for the bottom, you ain't going to time it. You'll never, nobody, not even the best minds in the world can time the bottom. So you're not going to time the bottom if you're waiting for the bottom. But we've timed the top. We've hit the top. You can say I've timed the top of the biggest bubble ever witnessed in human history, most likely, because we see it flatlining, ready to do a nosedive. So we've timed the top. We're not going to time the bottom. So now what do I do if I want to buy or I need to buy in this environment and I'm capable of buying? My advice right now is to always look at, with the standard amount down at today's interest rate, if you're pulling a mortgage or not, check that. Check to see if I come in with a standard amount down, today's interest rate, does my mortgage match up with the property's rent range, even if it's not going to be a rental? That's the best schematic you can use when looking at property if you're worried about something happening to you or your income. It's an insurance policy you pull for yourself. And that's the way the smart people think. They look at, what's my cost to carry? What's my exposure here? Is it cheaper for me to stay a renter than to buy? Then stay a renter. It's not important to own where you live. It's just important to own. That's what I always say. But you should look at standard amount down, today's interest rate, cost to carry is within its rent range. Great. There's some safety there. It shows that market is fairly healthy, or healthier than a lot of other ones. Number two, I like to stay in and around the median home price nationally. If I stay within the median home price nationally, I'm in much better shape than if I'm buying. See, if you're buying in the $2 million district where I live and you get a 50% haircut, that's going to hurt. That's going to hurt. But if you're buying it, and the thing is these are the areas that are super exposed. So if you buy like in the 2s and the 3s, maybe the 4s, and your cost to carry is within its rent range, because that's the true value of a home. You want to know the true value of your home? You should know what it would rent for, even if it's not a rental. What somebody's willing to pay to rent your home is what it's actually worth, not what your payment is. No. So you need to check those things. I would stick within national home price averages. Those properties are going to weather a storm much better because they're within the national average. And two, does the property pencil out, standard amount down, today's interest rate, is my mortgage within its rent range? Those are the only things, in my opinion, that you can do when buying in this environment.
Yeah, I love it, man. I mean, I constantly tell people, stop the emotions, use the data to find the deal. And I love your cash flow analysis, man. I've used that on, many of the videos that I do now. We do the market analysis on the rent. And then we just look at it worst case scenario. We want to plan for the worst case if we're forced to sell and we're trapped upside down. So if we're trapped upside down, if we're forced to sell, here's our option, right? Here's our option that's not foreclosure. Here's our option that's not a short sell. And I want to add one thing to your great advice. I would say another, thing that is so important, Scott, that's really underutilized here is goals. I don't see a lot of people setting goals. Goals are so important. I mean, we can dream. Our dreams shape our approach, or rather, our dreams shape our goals, and our goals shape our approach. And when we have goals, it's easier to focus on what's in front of us. When we don't have goals, we're blowing around in the wind. We don't know what's going on. This person's saying this person's saying that. But at least those goals will keep us grounded. So I would strongly encourage anyone that's listening, if you don't already have goals, right? Start making goals and ask yourself, what can I afford? What do I want in this housing market? Because if you're not doing that, again, it's possible you become part of the sheep. And we don't want to be part of the sheep. Society, is making a killing financially off of sheepish behavior.
Well, absolutely. I mean, that's the industry. We play on your emotions. As a trained salesman, I know once you make up your mind to buy it, you're buying. The sky could be falling, but you hit the nail on the head. Travis, listen, it's probably the most important thing we've said here today. There's only one difference between successful people and unsuccessful people. And successful people have goals. That is the only difference. If you can set a goal, I don't care what it is, you should have a goal. You should wake up every morning and know what your goal is. You should have it written down. You should look at it. That's one of the things that changed my life forever. Because everything now is just the world's my playground now. Why? Because I set a goal, I worked towards a goal, it was an attainable goal, and you should always be chasing some worthwhile goal. So that's the only difference. If you decide today, I'm setting a goal to eventually buy a house, and you write it down, buy a house, that's my goal, or whatever your goal is. It might just be be a better father. I don't know, whatever it is. You can pick any goal, and then you are now part of the top 5% of people, successful people in the world, that wake up every morning with a goal. And that's the challenge we're seeing right now out of mainstream media, social media, our digital diet. We're buried in phones 24/7.
Yeah.
We are super jacked up out there. And most people are measuring their insides by other people's outsides by what they see on social media. Choosing other people's goals come up with your own goal. And you'll be success.
You know what I'm saying, Scott? That's so crazy to me because, I just tell people, fine, if you're confused, don't listen to me. Don't listen to the realtors. Listen to the people that just bought. Oh my God, right? Like, listen to those. Dude, 93% on a survey I just read have buyers regret. So what I'm saying is these consumers, a lot of first-time home buyers that are trading in their peaceful life, okay, a life where they can save money, a life where they're comfortable. They're trading that in because they're sold on the American dream of home ownership, and they're pressured by society, making them feel stupid. If you don't buy, you're stupid. So they buy.
Oh, it was insane. I mean, the Kool-Aid drinking in this bubble was something I've never seen. The pure, unadulterated herd mentality was nothing like we've ever seen. This bubble, I always say, people used to like, this time is different. I'm like, you're right. This time is different than 2008. I'd be like, you're right. It is different. It's worse. Back in 2008, we weren't on screens all day long. Everything now was put on hyper speed, and the herd mentality, the casino climate due to stimulus, the Kool-Aid drinking. I almost drank it. That's when I turned on the camera and came to YouTube. I was like, everybody's searching houses. It's a good time to buy. Maybe I will too. And I'm like, wait, this is bubble behavior. My phone's ringing off the hook. This can't sustain itself. There's no way. Now it's going to become what happens if it's never been if, it's always been when. We've always had booms and busts. We've tracked them back fairly successfully, identifying boom and bust periods. We just went through another boom period. So logic would tell you another bust mathematically is there. And so it's like, what do we need to do right now to protect ourselves? And a lot of people, like you said, they didn't. They went out and bought at the height, threw caution at the wind, and now the only people, they don't own their homes. Their homes own them. They can't sell for what they paid for it for a lot of these guys, or they're just an anchor. They're just trying to hold on to the house. I saw this in 2008. I lived this in 2008. Where I saw the house come down in value, but I just continued to make the payment because I could. But eventually I was like, man, I'm just making a payment on a depreciated asset. It's an anchor. I'm one hiccup away from a tailspin. Like, this isn't worth it.
I lost my house to foreclosure. I know exactly what you're saying. And I asked myself, when I was in this situation, what happened? This was in 2009. I was a professional. I was just like prodigy young man that's making all this money. He's doing so well, man. And honestly, I think when I look back, what I was thinking was actually, I wasn't thinking. I think what happened was I just wasn't thinking. I just wanted to continue my life the way it was. I wanted to keep my head in the sand. So I was blindsided and I lost everything. And I'm so worried. I mean, it is sad. I went through it and I dug myself out of the hole, man. And I see.
Well, here's the thing, Travis. Like, I know for you and for myself included, I don't regret going through what I went through. I was lucky. I got out with the short sale. I recovered pretty quick, but I don't regret it anymore. I did for a while, but I don't anymore. Why? Because what I've learned has become very valuable to me. I mean, that experience, why we drank the Kool-Aid in 08 is because we didn't have the life experience yet to know any better. That's what happened in this bubble. Most people, and a lot of
Good
people
point.
that even knew better. A lot of people lived through 2008 and had some scars, but
I
they
know.
drank the Kool-Aid again. And so, and like I said, there's a lot of people I have no worries about buying in this environment. I've helped many of you all across America identify pencils out. Is it with what's the price range? Are we stuck on market? Can we test it with an offer? Can we avoid a bidding war? Those are things that we can do. There's a lot of people I don't worry about as much. But over 10 million people bought at the peak of the super bubble, and those are people now upside down in their assets. They can no longer sell for what they paid. Maybe a break even at best, closing costs, all the things associated with that. And so, like you said, the buyer's remorse is real. It's a forward
Yes.
indicator. It's the psychology of people now. The data will tell us what happened. We
Yeah.
need to know what's going to happen. And
Yeah.
that's where it comes down to the psychology of people. Do they have buyers? That's not good. That's not good when you see those types of numbers. 97% of all people that bought in the bubble wish they had not. I don't blame them. I
Yeah.
wish we had saved more people. I know we saved a lot. But I wish we could have saved more.
That's something I think about a lot, and actually, it causes me a little bit of depression. I've seen even some of my viewers and some of my subscribers because basically a little bit lose hope because the timelines didn't happen the way that I thought it would, in the way that we wanted it to. But that doesn't mean that what we're saying is wrong. It just means that it didn't happen on the time that we thought it would. That's all it means. And honestly, when I'm wrong, Scott, I ask myself an important question: why? If I continue, if we keep asking ourselves why, we're going to educate ourselves more. And there's multiple reasons why. The reality is it's an incredibly unaffordable, for most people, toxic market, broke fundamentals, not sustainable. At least that's our opinion. Obviously, that's our opinion. And what's wrong with caution, Scott? I don't think there's much wrong with caution, but I will say this: I do agree, when we're in a normal market, procrastination is expensive, right? Before 2009, one of the problems with people on the sidelines was procrastination. So that situation, they did miss out on opportunities. So right now we're in a situation to where there's a really fine line, Scott, right? We don't want to time the market necessarily. We don't want to wait and pick the bottom necessarily. We don't want to buy too soon. We won't want to buy too late. So there's certain things that we need to take into consideration as we're waiting. Maybe one of those things is the Fed pivot, going down in interest rates, seeing what happens after this year. There's certain things we can wait on. But one thing we don't want to do, if we're on the sidelines, is we don't want to give up hope. In my opinion, helping thousands of consumers, Scott, I could tell you the most powerful thing that I have seen for people getting off the ground, getting out of the gutter like myself, is hope. And I'm not talking about false hope. I'm talking about real hope, my friend. So
Well,
anything
yeah,
else you want to add before
yeah.
we go?
And final thoughts. Our quality of life is number one. And if you're looking for a home to improve your quality of life, I have bad news. It won't. As much as I want to sell you a home, it's just like when you buy anything else, a new car. It's nice for the first year, month, or whatever it is. But like you said, I mean, the reality, the name of the game here is, folks, like, we're learning as we go too. I'm just giving you real life heat maps and temperature checks of an active licensed real estate agent who's now working all over America, seeing how people are thinking, seeing how they're operating. It's cooled off massively. Let me just tell you something, friends. It is ice water on these markets compared to what I saw in the height of the euphoria. That was unorganic growth. That was market manipulation. Now it's going to be the hat trick is, can they keep it from crashing? You get to ask yourself that question. We all have to put a percentage of likelihood. We're all going to come in at a different percentage, but you have to put some percentage of likelihood when you overheat the biggest asset class in the world, the U.S. housing market. It's going to come with crash risk. And I'm seeing way more go on in this bubble than I saw in 08. That scares me straight. I don't think there's anything wrong with playing it safe, especially right now. Insulate yourself, diversify yourself. You're not going to time the bottom. You just don't want to buy in the tippy top unless you've checked a few things. And Travis and I will be here to help you make sure you're doing that every step of the way, because it's not only what you need, it's in fact what you deserve.
Absolutely, man. Great final thoughts there. And Scott, here's the thing. And everyone that's listening to us, Scott and I understand perfectly clear, because we're professionals in the industry, that 2008 was different. There was a subprime or loan collapse, mortgage collapse in 2008. So it was vastly different. But then when you kind of analyze certain, things with that subprime collapse, I asked myself, okay, well, what led to the crash? Like, what was wrong with the subprime? People stopped paying their bills. Okay. Yeah. The stated income loans made it easy for people to purchase houses that were unaffordable. But ultimately, what happened was the reality of the last time, Scott, is unaffordability got out of control. People stopped making their payments. It led to default. Now, I understand there was adjustable mortgages. Some of those payments went up, but it all had to do with unaffordability. Anyway,
Yeah,
Scott,
well, yeah, real quick, all loans weren't adjustable mortgages. There was only a
yeah.
handfuls out there. What happened is that we had extreme appreciation overnight and it couldn't sustain itself, and that's what happened again. So please proceed with caution and stay tuned because we'll do our best to continue to bring you real live updates the best of our ability. Thank you so much, Travis, and everybody for watching today. Go make it count, and I'll see you guys hopefully soon.
Thank you so much, brother. And guys, don't forget to go on over to Scott Walters' page, subscribe to his channel if you want additional perspective. Now, other than that, if you guys are out there investing in real estate, we wish you luck and we hope you win.